Okay, so for those that are just joining, good evening, everyone. So what we're trying to do, first of all, is to open a demo account. Once you've been able to open your account with your broker, that's perfect. Then the next thing is to download the application either on your phone or on your computer. Whichever way, just download the app. The app we're using is C Trader, okay, FX Pro C Trader. So that's the app we're using. So you can either use it on your phone or on the laptop or desktop or tablet, whichever one. Now, so once you download the app, automatically, when you log in with the email address and the password with which you opened your account, okay, on the broker's website, you will have a live account, okay, associated to your email, okay, associated to your account. So automatically you have a live account. When you see that live account, you will find out that all the currency pairs, okay, there, all the currency pairs on your live account will not have this green tick. Okay, so it will not be possible for you to trade. First of all, because possibly your account has not been verified. Secondly, you have not put any money into the account. You have not operated the account, okay? So it will be impossible for you to trade it. But for now, you are not even going to put money there, okay? I don't expect anyone to put real money to start trading because you don't still know what to trade. So just open a demo account. So that's what I'm trying to explain to all of us. For those that have it on the computer, I'll go over it again, but very quickly. If you have your platform open like this, okay, with a live account. So on the top right-hand corner, like what I have here, top right-hand corner, you can see the cursor moving around that side. What does it say? It says live. 7043982, that's the account number, and then edging and all that, okay? It gives me the balance of the account, and then you have this little arrow there, okay? So you can click on that. When you click on that, it gives you more options. Now, if you have so many other accounts, you will see all the accounts, okay? Then you see the last option there that says create new trading account. So create new trading account is what you have to click. Now, when you click that, you will see this dialog box, okay? So in this dialog box, you can have the amount, which is the minimum is 1,000 for a demo account. I will tell you what to do if you don't want to start with 1,000, but you must open the demo account with 1,000. Then you have the currency. You have to choose euros or dollars or pounds, whichever way. Then the leverage, remember, we are using 1 to 30. You click on that. Sharia compliant, swap free, don't click that, okay, because we are not going to trade real accounts with Sharia compliant. So you create account. When you create the account, it opens up automatically and you have something like this, okay? So you have something like this that shows up on your program. So that is for people that are using desktops, laptops, or tablets, okay? Now, I was trying to explain for those using phones, all right? Now, when you're using phone, this is how it shows on your phone, right? This is how it shows. So it shows just the currencies, right? Now, to open a demo account here, all you need to do is to click on this menu. You see those 3 lines there? That represents your menu. When you click on that, you see you have different options. And then you can click on the plus, okay? That sign of the cross. When you click on the sign of the cross, then it gives you option, it gives you the option to create account. And then you can click on open demo account. So when you click, on open demo account, it gives you all that information like I explained earlier. So you can have the deposit amount, the currency, the leverage, and then the account type. Well, that's hedging. By default, it gives you hedging. Then Sharia compliant or not, you can click off the Sharia compliant, and then you open demo account. Okay, so that is how a demo account will be opened. So do we all have a demo account now? Yes or no? Yes, yes. Okay. All right. Now, today, I would not be wasting time. Okay. I know that a lot of us will catch up a bit later. Yes, leverage is 1 to 30. A lot of us will catch up a bit later, but I've started recording. Yeah, so I will make the video available for review. Now you see that I'm not posting the video for everyone to see anymore, and that's why you see the numbers reducing per day. Yeah, so I really want those that are serious about this to be here. Okay, so now today I have someone that will first start with us. He will speak to us a bit before I start talking about Forex itself. So when you trade, there are different types of analysis that we do when we are trading. So as a trader, we have different types of analysis, and then we have different types of traders. Okay, let me first of all share that with us so that we know the different types of traders that we have. Let me see if I can share that with us very quickly. So, excuse me. So as a trader, you need to know, what type of trader you are, okay? Because that will actually help you to decide the type of analysis you should focus on, and also your approach to trading. All right. There are some of us that we're working. You have a job that you do, and you don't really have all the time, to sit down with the computer every day or start checking your phone every time because you're working. And maybe you just have 1 hour at the end of the day, or 30 minutes or 20 minutes to quickly check your phone or your computer at home and trade. Now, can someone like that trade? Yes, you can still trade. It's very possible. There are some of us that, you have all the time. You are like full housewife or full husband, full house husband. You don't go anywhere. You have the whole day to yourself. And you can check the computer like every minute. Now, there are types of trades you can also participate in. Like you can be a particular type of trader if you are such. And also, we have people that they have time, but they don't really like, going to the screen every time. Now, so what I'm trying to say here is we are different types of people. We are different types of people, and definitely we will choose our own style of trading. But one thing that is sure is no matter who you are, you can always trade. Okay. So before I bring on Sonny, who is going to share with us briefly the types of analysis that we have, which I would explain much later, I think more tomorrow when I'm making some analysis, because we're going to trade tomorrow. Yeah, you will trade tonight too with your demo account. So because what we're going to do today is going to be a bit practical too, so you will trade. But tomorrow I will be sharing some of my secrets. Okay, I will be sharing 3 of my major systems with you, my trade system. Okay, how I make my decisions and how I make my money and how I lose my money. Okay, so I'll be sharing all that with us tomorrow fully. That's what we do basically tomorrow. Today we'll just look at the charts, what it's like, how to place orders, what types of orders we place and stuff like that. So that's what we're going to be doing today. Then tomorrow it's about building your own system, start to trade, start to make money. And then on Friday, it will be more of question and answer, then opportunities that are there for us if we really want to trade and stuff like that. So that's what we're going to be doing. So before Mr. Sonny comes up, let's look at the types of traders that we have. I'll share that with you. Okay, so these are the type of traders we have. Look at this. So in Forex trading, in trading generally, we have these 4 types of traders. We have the scalper, we have the day trader, we have the position trader, and we have the swing trader. Okay, now let me quickly explain what this means. When you say you're a scalper is one that comes online, just watches the trend, they go with trend. Okay, they look at the trend of the trade, they see how it's going up and down, and then they stay there. And once they see the pattern, okay, that the market is given, they quickly go in. Most of these scalpers, they trade heavily, okay? They go in quickly, under 10-15 minutes, they hit their target, take their profits, and off they go. Now, some people do that. They time themselves like, okay, today I want to spend 1 hour to trade. They are scalpers. It doesn't matter what the news is saying. It doesn't matter what is happening around the world. They don't give a shit. They just need that chart. Choose a particular currency pair. They look at the one that has fluidity, okay? So scalpers are people like that. They don't really have time to be reading news, to be sitting down with computers. They dedicate particular time, 15 minutes, 20 minutes. They do what they got to do. They hit their profits and they leave for the day. Now, I do that sometimes, but I don't really like that, okay? Because I love the charts. I love, the trades. I love watching the charts. My wife knows my phone is always beside me. Anywhere I am, I always watch the trades. If I'm not exaggerating, I would say every 10 minutes or every 15 minutes. Every 15 minutes, I must check Forex. I must check different currencies, different trades, what's happening, what's going on. And most of the time, I go to Google News, I go to Bloomberg, I go to CNN Business News. I check. I want to know what's happening around the world, okay? So I want to know what's going to happen to oil, what's going to happen to the economy. Like, as we all know, Japan officially entered into recession now. Germany, which is the 4th largest economy in the world, has entered into recession. Of course, Spain is always there. So you see that these big countries are entering into recession. So it means that we're going to be having a global recession. Now, a scalper doesn't need all that news. All he needs is his chart. He's going up and down. He takes his profits. It doesn't matter whether the news is favorable or not. Okay, so that's a scalper. Now, we have the day trader. The day trader is the one that, specifically checks the graph, listens to news, and he puts his trade, he places his order against another day, okay, just for the day, all right? So he places his order. He doesn't want it to stay for 1 week. No, he takes his decisions as per what will happen in the next 24 hours. So he looks at the trend, he listens to the news, he takes a safe, position, places his order, and that's it. He wins, he loses, it doesn't matter. He's a day trader. Day traders don't like their orders to stay longer than 1 day. Once it's staying longer than 1 day, they close it up, or they just close it up. So that's a day trader. Then you have the swing trader. I am a swing trader. Swing trader, if you like, you don't listen to news or anything. Is one of my systems that I'm going to teach you. The all-time high and the all-time low. I'm that kind of person. When I see that it's like, phew, the thing just rises, boom, and it's so high. Now, I swing into trade, okay? I trade against the trend. So swing traders, most of the time, they trade against the trend, okay? The market is going up. A swing trader will look at a very convenient position and place a sell, expecting it to come down. Now, it's a very delicate one. You have to have a lot of experience to do that. If not, you will lose most of the time. So because you don't know, nobody tells you when it's going to peak, okay, when it's going to hit that depression point, or that, what do you call it now, support and, who can remind me? Okay, that point, that key point where it begins to descend. Now, you don't know. So if you're not careful, if you're not so experienced, you might place a sell, and that's when the thing starts shooting up, and then you might lose a lot of money. Okay, so to be a swing trader, you must be very, very experienced. But I am a swing trader. I bet you, I tell you that I'm a very, very good swing trader. It works for me. But one thing about swing traders is they can leave their orders for a long time. They don't care. They can leave it for 1, 2, 3 weeks maximum. They don't care. Then position traders. Position traders are the people that trade like banks. They project into the future. All right. So they place an order knowing where, things are going. So you know the future. For example, as I'm saying to you now, we're going into global economic depression. So is a position trader will place his order when the when the global recession really, really gets to the peak. And a position trader is not placing that order to make profit now. No, he places the order believing that maybe in the next 2 months, 3 months, 6 months, the economy will bounce back. And of course, from experience and from history, every time there is a global recession like that, within 6 months after the recession, the economy bounces back at least 30%, 30 to 50%. Okay, so I mean, for us now that know that if I have money to invest, when the recession really hits, it's still coming, it's not yet hitting. Let coronavirus go first. After coronavirus, then we start the recession. The recession, I think, will be starting around August, September for most countries, because that's when the winter comes, and then there are no more jobs, and people are not able to go to their holidays again, and then the real recession starts. Okay, so prepare for that. That's going to be a tough time. Now, but a position trader positions himself, positions his orders for the future. Okay, so those are the 4 different major types of traders, but you can be in between. You can be a swing position trader, you can be a swing day trader and all that, or you can be a swing scalper. You can mix everything together. So that's why in Forex, there is no professor of Forex, someone that knows it all. And there is no prophet of Forex that can tell you this is how it will be. No, everyone, according to their time, according to their passion, according to their risk appetite, will develop their own system of trading. Okay, is that understood? Do we understand that? If you understand these types of traders, just say yes, then we move on. Yes. Okay, I got a yes. I got another yes. I got so many yeses. All right, thank you very much. Now, so quickly, we also, please, which one is preferable for beginners? There is no one that is preferable. Okay, there is, like I said, it depends on the time. But for beginners, I will not advise you to be a scalper. Okay, I will not advise you to be a scalper. I will not teach you to be a scalper. Okay, because you might lose a lot of money, and it's not good for your health because you're going to have hypertension. Okay, that's because the market is not always in one direction. It's always up and down. So if it's going up against you, you can have high blood pressure. If it's coming down against you, you can have high blood pressure. And because you don't have experience, when it's going against you, and maybe you invested 100 euros and it's already in -5, you go like, I'm losing all my money. You close it, hoping that the next time I will make that $5 back. And then you open another position and then it goes to -8 again, you close it. Under 1 hour, you're already losing 10, 20 euros. Okay, now you're going to get scared. Then you begin to ask yourself, so it means I'm never going to make money in Forex. No, because you're using a wrong style. Okay, so for a beginner, don't even try scalping. For a beginner, it's still best to start with swing and position. Okay, position maybe not, because possibly you might not know yet how to interpret certain news. For example, if I ask you now that if unemployment rates drops in the US, what happens to the stock market? Many of you might not know. Okay, and those are the news that moves the market. So if you don't know that, then how would you be a position trader? Okay, so to be a good position trader, you must know the news and you must know how to interpret the news. I once had someone that used to trade. Mr. Sonny will tell us what that means. When you listen to news to trade, is a type of analysis. So I had a brother like that used to trade, with that pattern. And every time he places an order, he's always going negative. Now, listen, the funny part is, he will be the one to tell us the news that is coming, that is coming ahead, because we all wait for those news, like when Trump is going to give his news, when the CBN governor is going to give the news, when they're going to tell us about the job rates in the US, the job cuts, the unemployment rate. They give news, they give briefings. They call it briefings. So they give press briefings for those news. And so every trader is always waiting for those news. So if they tell you that unemployment rate jumped up in the US, you know that the economy is crashing. Okay, so investors pull out. Okay, that's what happens. Investors pull out, and then the trade drops. Okay, when unemployment rate increases, it means people are not getting jobs, and that's what is happening right now. They are losing millions of jobs in the US, and normally everything is supposed to be going down, but I don't know what's happening. It's still going up. I mean, the stock market for the US is going extremely high these few days. I mean, so that's Forex for you. We're going to get to that. But when he tells us about such news, and then we go like, okay, go ahead and place the order. Once the news comes out, he places the order, and it's always against him. So he did it the first time, the second time, the third time, and I called him. I said, listen, you have the news. You have the trading method. But the problem you have is interpretation of the news. You are interpreting the news and what it means, are reversed, in the reverse format. So instead of you to know that the market will go up, you read the news and assume that it will come down. So you're placing a sell when you're supposed to be placing a buy order. So that's very important. So if you want to be a position trader, a positional trader, you must be able to interpret the news, not just listen to it, but interpret it. So to start with, you can start with swing. You can be a swing trader. You won't lose much. And then you can be a day trader. Okay, so but I will teach you my system, which you can apply for a start to trade daily and weekly. Okay, so you can start with that. But on Friday, I will tell you more opportunities that will help you if you really want to start. Okay, so that you can trade along with me. I trade every day. I don't stop. It's my life. I love it. So I trade every day, and I have a mentoring group where I can add you, and then you can trade with us. So, and then you will learn how we do the trading, why we take the decisions, what news is coming, how will it affect us, and stuff like that. Okay, so and you can also learn that on the internet. You Google it and listen to it on YouTube, but just be careful who you listen to. Like I said, Forex is kind of very personal. It's like salvation, no? So you save yourself, you save your own head, you save your own money. It's your money. Let nobody, dictate to you what to do with your money. But get guidance from people that have experience. All right, so is Mr. Sonny back? I don't know if his system is back. He was trying to reboot his system, but if not, we move straight. Mr. Sonny, are you trying to picture? Okay, I think he's back. Hello? Okay. His system is not coming up. I'm trying to. Okay, yeah, he's up now. How are you, sir?
Yeah, my system. Sorry for that. My system went off, and I'm trying to get back to the pages
Okay.
I closed.
All right, thank you. So this is Mr. Sunny Nwoye. He's a very good friend of mine. He's also one of my directors, in the company that I run, well, in Nigeria, but we actually run it from here. And he's also a co-trader. He's my partner. He's my partner in trading. He has his own special way of trading, which is quite different from mine. And so we enjoy the two worlds, okay? So I just want to introduce him to us, and also he will just briefly tell us, maybe in 5 minutes, the different types of analysis that we have in Forex. So if you have your pen and paper, you might want to note that down. We will still talk about that maybe tomorrow, or if we have time tonight, we might. Okay, so let him just say to us what types of analysis do we have. I've told you the types of traders, then the types of analysis that we have in Forex. Over to you, sir.
Okay, thank you very much, sir. I really appreciate the wonderful opportunity you've given to me to at least impact the little knowledge I have with everyone. Hi everyone. Okay, so I wouldn't want to waste much of our time, and I'll just go straight to the points on analysis. The market analysis actually it's kind of a big word. Some people might see it like it's kind of market analysis, but it's just analyzing the market, understanding what the market does. Okay, so basically, to be a trader, you have to understand what's happening in the market. Like Mr. Shola has said, you have to properly get the knowledge of what the market economic, the world's economy is, what's happening with the world economy and all those stuff. So we have basically three major analysis, which I would say a lot of people have already, debated on which one is the best. But for me, as a trader, I would suggest that we learn everything. No, nothing, no, there's no harm in getting knowledge, because to be a good trader, it depends on your knowledge and application. So we have three major analyses, which there are. We have the first one, technical analysis. We have fundamental analysis. I don't know if I'm too fast, because I'm trying to rush it so I can give it back to Mr. Shola. He can continue. So we have first technical analysis, fundamental analysis, the second, and sentiment analysis. So this analysis helps you to understand what kind of trader you want to, or the type of trading you want to be going into, or the kind of trader you want to be. You understand? Like for me, I have the knowledge of mostly, let's say the three, but I would say I'm a kind of a technical trader. I love technical analysis. You understand? So let me explain what's this analysis one by one. I'll just briefly explain them, then hand over to Mr. Shola so he can give us more details on it. So these three analysis, the first one is technical analysis. Technical analysis has to do with understanding the charts. You understand? Understanding what's the price movement of the market, what has happened in the history of the price movement in the market, and be able to predict what is going to happen. You understand? While reading the charts and using a lot of technical indicators and all those stuff, you get. I don't know. I don't have. I can't really share my screen now. I would have loved to give us some, you know,
Sorry, your mic is off. Mr. Sunny, your mic is off.
Sorry, I don't really know what's wrong with my phone.
Okay, now it's okay
Can
now.
we all hear now?
Yes.
Okay. So I was talking about the technical analysis. It's based on reading charts, understanding previous market movements. By you understanding what's happening in this time frame, you understand what's the market going to do maybe in the next 1 hour, in the next future, understanding resistance and support. All those things are technical terms which in future you understand. But technical analysis is just you understanding the theory of the market, you understand? When you open your platform or your trading platform, you're able to look at the previous history or the charts, you maybe 1 hour or 1 year time frame. You look at maybe how the movement is, maybe so November 20 something something, the market was down, and again maybe December something something, the market is up. Maybe the next year again, November maybe 2015, the market went down again, and December. So by you reading this chart and you saw the previous movement, you're able to understand like, okay, if this is a repetitive pattern, I think maybe probably November again, something like this might happen. You understand? Then you study the charts very well. You'll be able to use
Yeah.
basically, technical analysis is just technical things. Being a technical trader, watching charts, looking at indicators, and understanding what's happening in the market. You understand, through technical systems. You get, so that's all about technical analysis. Then for fundamental analysis, like Mr. Shola said earlier, we had a friend. Well, he always based his trading on news. You understand? So that's what fundamental analysis is. Fundamental analysis is understanding how the news affects the market. You understand? Probably Donald Trump comes out tomorrow and say, okay, we found the vaccine for coronavirus and all those things. Immediately, just look at the dollar, the currency. You will see it will skyrocket. And any currency you're trading against dollar, trust me, is not going to be going well. You understand? So this fundamental analysis is all about what the world leaders are saying or what's happening in one country's economy, maybe recession. These things affect the market, you understand, the Forex market. So fundamental analysis is all about news, how the news affect the market. Probably they say, okay, tomorrow, the government or Saudi Arabia government is going to reduce the price of oil and this and this and that. This is going to happen. Just if you hear that news, look at your trade. Probably you won't have to trade, but just look at the trade. If they say, okay, in so few hours, a news will be releasing, will be released by so head of state about so economy or currency. Just look at that currency. If you open your charts, look at that currency. And once that news is released, immediately you will see either a drop or a jump in the currency, depending on how the news affect the market. If the news is a good news, it's going to help the currency very well. If it's a bad news, the currency is going to go down. So what's fundamental analysis is actually how the news, with social powers and all political, involvements, how it affects the market. So that's two different things entirely. Like I said, I'm a technical trader, and fundamental trading is another type of, trading entirely. But it's also good to have all this knowledge. You understand? It helps a lot. You understand? So the last one we have is sentiment trading. Well, I'm going to give Mr. Shola this one to explain a bit more, because this is more like overall of everything. So
Yeah.
he has more, broader ideas on this sentiment trading. So Mr. Shola, thank you very much.
Okay. Thank you very much, Mr. Sonny. Please, can we say thank you to him? Let's just say thank you to him. He's done a good job. Thank you very much. Okay. All right. Thank you. Thank you. Yes. Thank you. Okay, so like he said, we have those three. I mean, I actually came up with these sentimental analysis, right? I mean, if you check, possibly some people don't have it, as a type of trading. But I say to people that I'm a sentimental analyst. I'm a sentimental trader. And I will explain that to you. And this is how I came about that, okay? So this is very personal to me. Now, the first one he talked about is technical analysis, right? The technical analysis, like he well explained to us, has to do with studying the patterns, okay, on the charts and also using the instruments. There are so many. I will show us that tonight. We have different types of instruments. We have the oscillators, we have the Fibonacci retracements, we have the MACD, we have the FCI. There are so many of them. There are so many instruments, like they are mathematical instruments. They are all softwares, like programs that people have developed, okay, to study the patterns of the market, you know. So that's why many of us, we just live life and we wonder how well, you know, like the European community, the Americans, the Asians, how well they have, you know, built their economy and all that. Well, there are people that study these things and they have studied the pattern of life of people. Let me give you a very, very simple example so that you understand what I'm saying. For example, when do you think, just you give me answer, you say 1 or 2. When do you, or I mean A or B, when do you think the price of gas, okay, will go up in Europe? Is it during summer or during winter? Summer is A, winter is B. So when do you think the price of gas will go up, A or B? B. Everybody is saying B. Okay, why? Because everybody will use gas. Okay, so the demand for gas will be higher. So it's a pattern, right? So it means that during winter, the price goes up. Something might happen. It might not go as high as it was last year. For example, maybe generally crude oil is, you know, losing value, but definitely it will still go up at that time. And when winter is going by and summer is coming in, it starts going down because the demand starts dropping. Now, that is simple, okay? But there are people that have really studied that and they have instruments, okay, that they can put on charts to tell you the pattern. Like when you see this type of fall, it might fall as far as this. Or if you see this type of, you know, resistance, it might go up as much as this. So all those things are what we call technical analysis. But my question is, who can tell the future? Nobody was able to analyze that coronavirus was going to drop the price of oil in the last 2 months. That was when we were supposed to hit the peak, okay, of the price, February, March. That was when we were supposed to hit the peak, but that was when it really dropped. It dropped to its lowest low. Why? Because of coronavirus. All right. So when I see stocks like that, you know, in the financial markets, and then the second one is the fundamental analysis, which has to do with the news and events. I cannot tell what Donald Trump is going to say tomorrow. The other day he said he found the cure for coronavirus, and he said it's chloroquine. And of course, from the time he said that, there was an effect in the market. Some people were angry, some investors went crazy, and there was movement. Okay. After that, he said maybe they should inject people with disinfectants. I mean, you might think that the guy is just crazy. The guy is not crazy. He is a businessman. He knows that every tweet he makes, every statement he makes, every press release, every fight he raises with his secretary, every contentious word he uses against his vice president, every word he speaks against the ex-president Obama, whatever, all these things have effect on the economy. And if you notice very well, since he came into power, the US stocks has been like on top ever. I mean, so he is not foolish. To the world, he's a foolish man, but he's a businessman. So that is what you call fundamental analysis. For people that understand that, I mean, do you think that Wall Street will not tell him some things to say sometimes when they need to move the market? They will, definitely. He doesn't write most of the things he says. They write it for him and he reads it out, okay? So the economists, they do most of those works, all right? So I came up with these, like, I don't know what they're going to write tomorrow. So no one can actually predict the future. And that's why I came up with this idea of sentimental analysis. Now, if the whole world is buying gold, what do you think will happen? Of course, the value will keep going up, but there will be a time that there will be an overbuy. And when they overbuy it, the price will drop because now everybody has gold and no one wants to buy, everybody wants to sell. The price will drop. Okay, so that is where my sentiment comes in. Like, listen, it's not going to be like this forever. Why did I start teaching people now on Zoom with about Forex and all that? I started thinking about it like, listen, a lot of people are still saying coronavirus might change our lives forever. And I said in my video that it has changed our lives already. I'm already looking into the future. How can I do my things on Zoom remotely and stuff like that? I'm a very sentimental person. And so if you are very, very sentimental, you can actually trade with sentiments. But you need to be very careful because a lot of times when you trade with sentiments, you can't explain it. Most of the times it might work for you, but you might not be able to explain it to people, okay? And I know a lot of people will lie, but most traders actually trade with sentiments. That's the truth. Most traders, even after doing your technical analysis, doing your fundamental analysis, you still need that sentiment to make your orders, okay? So for those of you that are Christians, for example, you can call it faith. Like you just believe, like, why did you make that order? I don't know. I just feel like this will happen. I just believe that this will change. That's what you call sentiment. And that's what a lot of us will do. A lot of us will do it. So, but you need to be able to control it, okay? So it doesn't start controlling you. Don't get sentimental to make money, okay? When you get sentimental to make money, you will lose a lot of it. You can get sentimental about the charts, about the news and stuff like that, but not about your money, okay? So don't get sentimental like, I want to double my money. No, that's greed, okay? So that's what you call sentimental analysis. It's just what you think would like it's not a guess, but what you strongly believe is going to happen. So I strongly believe, I told people from the first week of the lockdown of the coronavirus, when I saw the statistics and all that, I said to someone, I said, eventually we will live with this disease. There's not going to be a cure very soon. The government is going to get tired of locking people up, and then they will leave us to go out and live with it. Is it not happening now? Now, nobody predicted that to me, but I know it. Very soon, all of you will have to go out with your mask and work. And if you get the virus, you go to the hospital or you lock yourself up in the house. Those that will die will die. Those that will survive will survive. We're just going to live with it. It's going to be like common flu afterwards. Like we're going to get some good food you can eat that will defend you and stuff like that. That is being sentimental. That's not scientific. But at the end of the day, is it not happening? All right. So if you ask for example of sentimental analysis, that is one example. All right. So that's what you call analysis in Forex. It's not more than that. Okay. So that's what you will continue to learn for the rest of your life and what you will start to major in. So you have to choose one of these. I mean, don't choose sentimental analysis and say, I will only choose sentimental. No, you will lose all your money. You have to learn one of either technical analysis or fundamental analysis. Be very strong in that. And then with your sentiment, you begin to make a whole lot of money. All right, so tonight, let's go to our charts. Let's see practically what Forex is like. I'll share my screen now and then we see. So please, if you have your program on the computer, just open to it. If you have it on your phone, you might just watch the video, okay? Just watch what I'm doing because you cannot have this chart on your phone, okay? But if I explain to you very well, okay, with this platform, you will be able, at the end of the day, to manage everything on your phone, okay? So are we all here with me? Are we together? Now, when you have this platform, the first thing I want to talk about are the instruments that you can trade, okay, on this platform, especially FX Pro. So let's look at the instruments that we can trade. So when you come here, you see on the left-hand side, You see where they have popular markets, yeah? And then you have my majors, okay? Now, let me just show us briefly where we have that, okay? Now, under the, don't go to the, let's look at the popular markets, for example. Now, the things you can trade here, you can actually trade currencies like Forex. Then we have like WTI, which is oil. That's the oil, the crude oil. Then you have XAU USD. XAU is silver. I mean gold. Sorry, XAU is gold. So XAU USD is gold against dollar. Then you see this US 30. This is the US stock market. That's the US Dow Jones. Okay, 30 spot index. So these are index. So that's like they are, you know, the 30 companies that are listed, and they make up that US Dow Jones. You have the bigger one, which is USSPX 500. That's the spot, the S&P 500 spot index. So it's also an index that like stock market, not the stock, but like the stock market. Yeah. So you can trade that. The value of that is you can trade that also. Now, what else can you trade? Like I said, you can trade oil and gas, you can trade Forex, which are currencies, you can trade indexes, and of course, you can also trade stocks. Now, let's see, I'm trying to see, okay, you create a new watch list now. Now, if you look at this, if you click on my majors, okay, you click on the plus, that's the plus sign there, it gives you more options, okay, more options of the things you can trade on the platform. So let's look at it quickly. I take away the popular market. You see Forex Spot. Now, if you click on that Forex Spot, you see majors and minors. Now, what do we mean by majors and minors? We have certain currencies that are major, okay, in the financial world. Of course, the most important currency in the world, we all know it, is the dollar. Okay, so because most things are traded against the dollar, and dollar is like the international currency used for trade, to trade oil, to trade gas, to trade in agriculture, even in construction. You know, everything is in dollars. Most things are in dollars. So dollar is a major currency, followed by the euros. Then we have the pounds, we have the Canadian dollar, we have the Swiss franc, we have the Japanese yen, very important also, the Japanese yen, and some others like that. So those are major currencies. Then we have minor currencies, like the South African rand. The naira is not even there. The naira is not traded on the Forex market. So is that terrible? But we have the South African rand, we have the Turkish lira, we have the peso, the Brazilian, they use their own Brazilian, I've forgotten, maybe rupees or something. We have the Mexican peso, and some currencies like that, okay? Like the Polish, what do you call the Polish money now? Their currency from Poland, and so many others like that. Okay, I'm getting some, yeah. You can't find the majors on your screen. Well, you should be able to, if you go to the left-hand side, okay, where under the popular market, then you have the majors. You have my majors. Then you click on the arrow, okay, the plus. Well, but the most important thing, I'll still show you where you can get most of those things later, okay? The most important thing now is we are looking at the instruments we can trade on the platform, okay? Now, so, thank you, David. Yeah, you have the Zloty, the New Zealand dollar, and all that. Now, if you look at the majors here, look at that. You have the Canadian dollar against the CHF. The CHF is Swiss franc. Now, please note this. In Forex, we trade pairs. They are called pairs, okay? So you trade currency in pairs. So that's what it means is you trade a particular currency against another. That's what we mean by trading in pairs. Okay, so sorry. All right, so sorry for that. So we trade in pairs. That's extremely important. Okay, when Mr. Sonny was speaking to us, he was talking about you trading US dollar against other currencies, or you trading the pound against. So you always trade one currency against another, and of course that's where we have exchange, because Forex really means foreign exchange. Now, there will be no exchange if there are not two values involved, okay? If dollar is going to trade, it has to be traded against another currency. So the difference in value is what we trade. Now, you cannot trade if all the currencies have the same value. Then it will be 1 to 1. If you put dollar divided by the pound, if it's the same value, it's always going to be 1. But because it's never the same value, that gives us the opportunity to trade them against each other. Okay? Now, so if you look at these majors here, you'll see that you have the Canadian dollar against the Swiss franc, the Canadian dollar against the Japanese yen, the Swiss franc against the Japanese yen, euro against Canadian dollar, euro against Swiss franc, euro against pounds, euro against JPY, and on like that. Those are the majors. Then you have the minors, like I said. So you have these AUD, DKK. DKK is like the Denmark, the Danish krone. The Danish krone. Then you have the AUD is Australian dollar against the New Zealand dollar, Australian dollar against the Polish, I forget the salty. Then Australian dollar against the SGD, and on and on and on like that. You have the CHF, which is the Swiss franc, against the SGD again, Singapore dollar, that's SGD. So, well, you have the ZEC krone there. So you have all kinds of currency. So you see that the list is unending. You see the Great Britain pounds here against the ZAR. ZAR is the South African rand. Okay, so you see the pounds trading against the South African rand there, and on like that. So you have so many of them to choose from, okay, when you start to trade. Now, what does that do for us? That gives us an opportunity to trade at any time, because there are so many of these currencies that, you know, when the movement, I will show that to us on the chart in a while. When the movement is not really fluid, when the movement is not really there, you know, on the chart, it becomes difficult to trade. Or you place an order and you're not making your profit for a long time, because the value doesn't really change often. That's what it means. So it means that the chart is just going to be, you know, slow. When it's that slow, you don't want to trade such currencies. So what this gives us the opportunity to do is you can easily go to any of those currencies. So you have over 100, you know, over 100, instruments to trade with per time. Okay, so that's huge. Then, so let's leave that. You know, it's a short course I'm doing, so I can't really, unfortunately, I won't be able to break down everything. Now, after the Forex, you see that you also have, why is it, okay. So it came down here, so you can see it here. Let me put it up. It's better up. Now, after Forex, you have the metals, okay? So like I said, you can trade the metal against different currencies also. So you have the XAG. XAG is the silver, okay? So you're trading silver here against euros. You're trading silver against the dollar, gold against euros, gold against US dollar, then the gold against the US dollar in grams, and on like that. Now, so you have metal spots, so you can also trade metals, okay? Now, after metals, you have the energy spot. Now, energies, like I said, it's oil and gas. On FX Pro, we have only 3 of them. We have the British Brent, we have the natural gas, and then we have the WTI, the main crude oil, the world WTI. Okay, so those are the 3 energies that we have. So it's mostly oil and gas. So it's 2 oils and 1 gas. Brent is British oil. Okay. Then after that, you have indices. So like I said, indices are like the stock markets and the stocks themselves. So you have the major ones. When you click on the major ones, you see you have the Australian 200. So that's the Australian stock market. Okay. It's the value of the whole stock market. So it's not a particular stock. Then you have the Euro 50. That's the Euro 50. You have the France 40. You have the Germany 30. You have the Japanese 225. Then you have the UK 100. You have the US 30. You have the US, and this is the NASDAQ. Okay, it's also US stock 100, US 500. Those are the major. Okay, so you see that the Spanish stock is not major. Then you have the minor. That's where you have China, France 120, German Tech 30, Germany 50, Holland. Then you have the Spain 35. So you have the IBEX 35, Swiss 20, US 2000, and all that. So all these minors, what it means is their values are going to be much lesser than the majors. That's just it. And it's easier for you, if you want to trade those indices, it's easier for you to trade the minors if you have very low capital. I really don't trade indices. I don't. I mean, I trade the US 130. So, I mean, the US 30, sometimes if I see like big opportunity, I trade it. But apart from that, I don't really trade that. Then you have the cryptos, okay? Like I explained the other day, we have cryptocurrencies these days. So you have a whole lot of them. Most of them are trading against the dollar. So you have the BCH against the dollar. You have the Bitcoins. I don't even know the names of these cryptocurrencies, but I trade only Bitcoins. So the BTC USD is Bitcoins. Then you have others, okay? So at your own leisure time, you can go through all these. All these, they don't really matter because at the end of the day, what will matter to you is to place an order, okay? Study the chart, whichever chart, whatever the chart is. All that will matter to you is to study that chart and make your decisions and make your money, okay? So it doesn't matter the name. It's not the name that matters. What matters is what is really happening, in the market, and how you can make some money from there. All right, so do we all understand that so far? I mean, to a point. Did we get something? Yes? No? Yes? David is saying yes. No one else is talking. Do we have something do we gain something there? Do you understand the instruments now? Yeah? Okay. Very good. Now, after you have understood the instruments, your keyboard is stuck on yes, I like that. Okay. All right. So after you've understood the instruments, the next thing I want to show us is the chart. Okay. Now, this is your office. This is where you make your decisions. Okay. This is what will tell you whether you're going to make money in Forex or you're not going to make money. This is what you will study, okay? So the first thing I want you to notice on the chart is the trend. So I don't know, you cannot see my hand on it, but if you look at the charts, okay, I don't know if you can see it from my phone, you'll see that it's going up and down, going up and down, going up and down. Sometimes it goes very high up, sometimes just a little up. Sometimes it comes strongly down, sometimes just a little down, but you see that it's just going up and down. That's what you call trend, okay? That's what you call trend, the market trend. So market trend is always up and down, up and down. So that is one good thing about Forex. Now, that is why you can trade Forex whether the economy is going good or the economy is going bad. Why? Because it's always going up and down. Now, this is my rule. My first rule in Forex is this. My first rule in Forex is this, and it's a rule, it's a very natural rule, which I believe every one of us will support me that is a natural rule, that there is nothing that goes up that will not what? That will not come down, okay? There is nothing that goes up that will not come down. Even Jesus that went up, we understand that he's coming down again, to go up again, okay? Now, so if that applies even to the spirit man, then how much more things that are physical, okay? So there is nothing that goes up that will not come down. So if you start to trade, please note this. When you start to trade, if you start to trade, don't be anxious for nothing. Always remember this at the back of your mind, that there is nothing that goes up that will not come down, and there is nothing that goes down that will not come up. That is Forex for you. That is the economy for you. That is the world for you. So it's a natural phenomenon, and it works, okay? And it will always work in Forex. And that is actually what makes us to make money in Forex. Yeah. Someone says law of gravity. Yeah. Okay. So that's the trend. That's the chart. Now, depending on what you have, if you have like a desktop like this, you will be able to see exactly what I'm saying. But if it's a phone, you will be limited, okay? You can still have all these charts and all that, but there are places you need to click and all that. So I might be able to explain that later, okay? But for now, what is important is how to trade. Now, let's get our notes ready. So what do you do when you want to trade in Forex? Step one, you open the chart. You open the chart for the instrument you want to trade, okay? You open the chart. Just like I have here, the current chart that you have here is for USD CAD. You see, that's the one that is highlighted on my screen. That you see, it's a bit lighter than the others. So the current chart, this trend that you see right now, belongs to the US dollar against the Canadian dollar. So that is the behavior of the US dollar against the Canadian dollar presently. And the price here, you see this red line, it's actually a red and a green line. Both of them, you know, they are on top of each other now. So you have the buy line and the sell line. Now that price that is fluctuating there, 1.38843, sometimes it will go up, sometimes it will come down. That is the price. That is the current exchange rate for the US dollar against the Canadian dollar. So if you have $1 US, that's what it means, okay? If you have $1 US, how many Canadian dollars can you get from $1 US? Presently, as we're speaking right now, you will get 1.38853, now 1.3885652. So it's going up and down. So it will keep fluctuating, but on the average, 1.3885 something or 1.388. Let's just put it at 1.388 or 1.389. That's the current exchange rate, okay, for US dollar against the Canadian dollar. So that's what this actually means. So when you see it going up, it means that the dollar is getting stronger than the Canadian dollar. Okay, the US dollar is getting stronger. When this chart starts going up, it means that the US dollar is getting stronger than the Canadian dollar. Or, on the other hand, it could mean that the Canadian dollar is getting weaker than the US dollar. Okay, that's when this particular chart will be going up. So two things will make this chart go up. When the US dollar on its own is getting stronger, the chart, you see that it's going up gradually now. Now, when the US dollar is getting stronger than the Canadian dollar, this chart will go up. Or when the Canadian dollar is getting weaker this chart will go up. Can we put it in mathematics, in figures? Now, let's assume that the line, the price now, where it is now, is 1. And you know, like I said, US dollar against Canadian dollar is the same as saying the value of US dollar divided by the value of Canadian dollar. Okay, that's what it means. Now, if the US dollar, let's say 10 US dollars is equal to, say, 15 Canadian dollars, okay, what will be the fraction? It will be 10 over 15, right? But that is not possible because presently the dollar is stronger than the Canadian dollar. So it means that if we have 10 US dollars, possibly let's assume the Canadian dollars you get is going to be 5, yeah? So that will be 10 over 5. If you divide that, you have 2 point something, right? Now, so let's assume, I'm just putting it in mathematics. So 10 US dollars will give me 5 Canadian dollars. What happens if the dollar gets stronger and the Canadian dollar remains the same? So US dollar now goes, instead of 10, it gets stronger and it becomes 20. And the Canadian dollar is still 5. If you divide it, what do you get? You get 4. So from 2, you now get 4. So you see that the chart is going up. On the other hand, if the dollar remains the same as 10, the value remains 10, and okay, the dollar remains 10, okay, and then the Canadian dollar is weakened, it drops. So from 5, it drops to, let's say 2. What happens? You divide 10 by 2, what do you have? You have 5. So instead of 2, you see that it has gone up again. So that's why I said the chart goes up on 2 occasions. When the primary currency or the main currency is the first currency. When the main currency gets stronger than the base currency, the second currency is called the base currency. So you have the USD as the major or main currency, and then the CAD is the base, is the one under. That's what it means, base currency. So if the main currency is stronger than the base currency, the chart starts going up. Or if the base currency gets weaker than the main currency, the chart starts going up. Now, what will make the chart come down? When the main currency gets weaker than the base currency, the chart starts coming down. Or when the base currency gets stronger than the main currency, the chart starts going down, okay? So when dollar is weak, you see that this particular chart will start coming down. Or when the Canadian dollar gets very stronger, you see that this chart will start coming down, okay? So that is what happens 24 hours of the day. So it's all about value of 2 currencies fighting. One is getting stronger, the other is getting weaker. One is getting weaker, the other is getting stronger. They keep fighting, and while they are fighting, based on what we said earlier, because Trump is making trouble, or Trump is doing good, or the Prime Minister in Canada is doing good, or is doing bad, all these things begin to affect the value of both currencies. And then we now have this on the chart, going up and coming down, going up and coming down. And while it's going up, we can make money. While it's coming down, we can make money. This is the good news about Forex. Do we understand now how this trend is formed? How this up and down, up and down, up and down is formed on the chart? Do we understand that? If you understand it, please say yes. If you understand how it is formed, say yes, please. Yes? Okay. Okay. Don't worry, you can always listen back to the video, and pause it, do the mathematics later, but that's how it is formed. So when you see the chart, I know that the first day that many of us saw this chart, go like, hey, me, I don't go school, how I go understand this one? No. It has nothing to do with education. You are not the one that will be drawing the chart. Automatically, the chart will be drawing. The people will be playing their politics. The governments of the world will be playing their politics, and the chart will be drawing itself up and down, up and down. So your own duty is just look at the chart and make your decisions as to whether it's going to go up or it's going to come down. So all that we're going to be doing in Forex is to hope for something to happen, okay? You hope and believe that price is going to go up or it's going to come down. That's all you'll be doing every day in Forex. And as the more you are right, the more you make money. And the more you are wrong, the more you might be losing money. Okay, so that's that. Wow, time is really running, man. This course is supposed to be a 1-month course. Honestly. Okay, don't mind me. I'm sorry the way I'm taking it. I love to be very detailed in teaching, but I don't. Let me see if I can rush a bit. Okay. David says I have a month free. Yeah, all right, I understand. No, don't worry. We definitely will continue the class, but not on this platform. But we'll find a way to continue afterwards. Anyway, so let's get the basics right. Now, when do you make money in Forex and when do you lose money? I know that is a question a whole lot of people want to know. When do I make money? How do I make money? And then they say that I can lose money. How do I lose money? When do I lose money? Now, you make money and you lose money every time you place an order, okay? And you close an order. Now, what is an order? What is an order? What is an order? An order is a proposition, okay? Like, I want to use the word, a stake. You are staking, okay? Like you stake. For those people that used to bet, okay? When you want to bet, what do? You make a guess, right? Like that horse is gonna win the race, okay? I believe this horse is gonna win the race, and then they say they stake some money on that horse. Like if this horse wins, I'll win some money. So it's just like staking money, but it's not like betting, okay? Because betting, it's not your decision to make. But in Forex, it is your decision to make, okay? When you have done your studies or you've got news or you've got experience, you make your decisions and you stick by it. Now, also, in Forex, you don't lose until you close your order. And of course, you don't gain until you close your order too. So that stake, okay, that's money you stake on your Forex platform is not lost. And of course, it has not automatically become profit for you until you close that stake. So it is that stake that we call the order when you place an order. So that's the term we use in Forex. So we go like, we want to place an order. So that's an order. So let me quickly talk about the types of orders that we place in Forex. How do you place an order? Now, if you're using the desktop or the computer like this, and you have this platform here, okay, to place an order is very easy. First of all, make sure that the chart that you have in front of you is exactly the currency pair that you want to place an order on. Okay, that's extremely important. So right now I have US dollar, Canadian dollar. How do I change? How do I check other currency pairs? For example, I want to check the price of gold. Okay, gold is XAU. Now, if you come here, okay, I don't know if you're seeing my cursor here. Beside this US dollar, Canadian dollar, you have this add new chart. Let me see if I can get something to draw. Excuse me. Okay. Okay. Let me be like David now. All right. So David, don't draw right now. Okay. I'll be the one to draw. Okay. All right. Now, watch this. Here, you have the US dollar, Canadian dollar. Am I correct? Now, if you want to open another chart entirely, you have to come to this side where you have the plus sign. So this plus sign actually is where you need to click, okay, to draw to open another chart. So you see when I put it there, it says add new chart. So when I click on that, and then I will go to the one I want to add. So for example, I said I'm looking for gold against the dollar. All right, so I'll go to my majors. Let's see if it's part of the majors. Gold is XAUG. It's not here. Okay, wait. Yeah, it's here. XAG against the USD. Yeah. So I click that, and what happens? Can you see that where I had my USD CAD? What happens? It has changed to XAG USD. So what this means now is that right now, what I have here is, the chart. This chart now, okay, this old chart here is what? Is gold against, is gold against the US dollar. Okay, so this chart right now is gold against the US dollar. So you can see the pattern. You see it's rising, it went up, it came down, it went up, it's now stable, it came down, it went up, came down here, up, and now it's kind of stable. Okay, so if I want to place an order on this particular currency, not currency, on this particular metal spot, this gold US dollar, I will now study this chart. Okay, so after studying this chart, then I can decide to place an order. Okay, so I can decide to place an order. So that's how you place an order. That's how you open a chart. So you can open so many charts here. So if you see here, I have so many of them here because this little arrow here, with this little arrow, okay, let me show you. Okay, with these, excuse me. I don't know why this is open here. Okay, I'll bring this here. All right, so with this arrow here, can you see that? That small arrow there, I can actually go and I can actually go and just, you see, to scroll. So the more I click it, the more the charts. I've opened a lot of charts here. So they can actually scroll down. They can scroll and I can see different currencies. Now let me click on these. This is GBP USD. So you click on that, you see the chart. The chart changes because the trend for each currency pair or each gold or whatever instrument is always different. And that gives you better opportunity to be able to trade anything at any time. Okay, so that's that. So today, one thing that I want us to do, that we're going to do together, is we're going to learn how to place an order. Now, so when you want to place an order, yeah, you have already, the first thing is you open the chart. Okay, I want to place an order. Let me take one, for example. Let's do natural gas. Okay, so the first thing is you open your chart, yeah? Then you study the chart. Okay, let me assume I studied the chart. This was what I did yesterday. I shouldn't have done that on my real account because I didn't really study. I just placed an order yesterday. That was foolish. So, but that one is still there though. I will just wait for it to be profitable. Now, this is a chart, okay? Now, you don't take a quick decision. It's something that you would have been studying over maybe the whole day or over the week. For me, I've been studying this for a long time, right? Now, so maybe I want to do a quick one, yeah? And I saw this trend, okay? I look at this trend. Now, let's look at this trend together, okay? You just have to take one, yeah. So let's see this. Where is it again? No. Okay. All right. So we want to draw something here, and then you look at the chart. So you see that it's going up and down like every other chart. That's very normal. Yeah, so very normal. Now, look at the trend here. It goes up, it comes down. It goes up, it comes down. Now, this is a weekend. You see this gap here? This happened over the weekend, over one weekend, okay? So the market closed on a Friday, and on Sunday when the market opened back, this is where it started, okay? That's why, well, later on I will teach us that you try as much as possible not to leave positions opened over the weekend, except you have set your take profit and stop loss. But even at that, it's still very dangerous. It can wipe out your account, okay? Now, the thing came here, it was stable, and then it jumped up, it retraced itself a little bit, went up, retraced itself, went really up, retraced itself, and now it went steadily up. And just today, why do I say today? Because this is a 1 hour chart. I will explain what that means in a second. Just stay with me. This is a 1 hour chart. So it means that each of these candles, we call these ones candlesticks. You see each of these. Can I get another color? You see this particular one is one candlestick, okay? So that's a candlestick. This one here is a candlestick. You see, it looks like a candle, you know, with the wax and the wick. Well, this one has double wick, wick up and wick down. Okay, so it looks like it's like a candlestick. So we call it the Japanese candlestick. Now, so every hour a new candlestick is formed. Okay, if you check here, you see a countdown. You see that time is counting down. Right now it's 29.46, 29.45, 29.44. What does that mean? It is counting down the hour, because this candle, the last candle you see here, this one, is just forming, and it will keep. So the price, these two prices, okay, these two prices, they will keep going up and down on this last candle. Okay, they will not form another candle. You see this last candle that is red. So those two prices will go, yeah, you see that it's going up and down on it, and that's how that candle is formed. So as it's going up and down, it's actually forming that candle, and that will happen for the next 29 minutes. After 29 minutes, a new candle will form. So that's why we call it the 1 hour candle. So this is like the 1 hour chart. So it means that all these candles you have seen here, they were formed in 1 hour. So that's why I said all these drop, okay? So because we were here, right? And I said, now look at it, it dropped, okay? Now it dropped that much today. Why do I say today? Because if you count all the candles there, we have only 1, 2, 3, 4, 5, 6, 7 candles. So in the last 7 hours, that's from here to where it is right now, is just what has happened in the last 7 hours. So in the last 7 hours, what has happened to the price of natural gas? It has dropped badly. It really dropped, okay? It dropped from 2 point something dollars to $1.906. All right, so I have studied the chart. I mean, well, you can do more than that, but let's assume that I have studied the chart enough for today, and I want to place an order. Now, there are two types of orders. Please, this is very important. This is very important. Two types of orders. Now, you have a buy order and you have a sell order. Now, those are the two types of orders you have, buy or sell. Now, there are some other terms they use. They can call it like when you go long or you go short. Okay, when you go long is when you buy. And then when you say, oh, you go short, you sell. That's when you place a sell order. Now, you ask me, what am I buying? What am I selling? Like I said, it's like a stake. Okay, it's like a proposal. It's like an investment. So it's not like you have bought that. You are just placing an order. So that's why we call it a buy order and a sell order. So what it means is, now let me explain the two. When you place a buy order, like I said, going long, what you are saying is this. Maybe you place the order where the price is right now. Okay, let me draw a line. Watch this line. Maybe you place the order when the price was here. Okay, this was the price when you place the order. Now, when you place a buy order here, for a buy, okay, when you place a buy here, what you are saying, what you calculated, okay, what you assumed is that with the trend and with what I have seen, it looks to me like natural gas will go up, the price will go up. So if you are believing, if you are hoping, if you believe that the price will go up, or you heard news, or you are studying the market and you know that the price is going up, you will place a buy order. It's an order you placed. You have not lost money, you have not gained money. So when do you make money? When you place a buy order. When the market, okay, the trend actually favors you is when it goes up. So if truly the trend or the value bounces up as you have guessed, or as you have proposed, or as you have assumed, or as you have believed, okay, if it goes up, then you begin to see green. Look at this place here. You see, this is green. You know why it's green? Because this order that was placed, this US dollar, Canadian dollar, was a buy. Okay, so it means that this person placed a buy order, and the value of that currency pair, that US dollar against Canadian dollar, has gone up above that order. So when it goes up, you begin to see green. That's, you are making profit already. That's when you see green. So that's when you make money by placing a buy order. Now, what happens if you place a buy and then the value starts dropping? Then this is what will happen. Let me just show you. This is what has happened to my account of yesterday. Now, you see this account of yesterday. What has happened? You see that you have two orders here that are what? Negative. You see both of them are negative. Now, the question is this: where is my balance? Remember that my balance yesterday was 200, right? Oh, sorry, excuse me. Everywhere is filled with all kinds of my desktop. Where is it? Okay. I need to do something with all these videos. Okay, yeah, very good now. So you see that the balance is still there. My balance has not changed. My balance is still what? It's still 200. So my balance is still 200. How come? Well, because I have not lost money. Okay, thank you, David. Because I have not lost money. So that's why my balance is still 200 there. Okay, so that the market is going against you doesn't mean that you have lost money. Hello? It doesn't mean you have lost money. It just means that as at this time, it is not going in your way. So what do you have to do? You wait and be patient. And you will trust your judgment. Okay? This is where you need to trust your judgment. What do I mean by trust your judgment? Yes, you have to trust your judgment that this order you placed will still go your way. So it will still go up. Now, when it reverses and it starts going up, it turns green. That's just what it means. And then when it is green and you are satisfied, or you set a take profit, you have your profit. Okay? So let's go back to the other one, I guess, that is green. Hopefully it's still green, or maybe not. Now, look at this. Yeah, you see it's still green. Now, why is it green? Let's go to the chart, okay? To the chart of the US dollar, Canadian dollar. Okay, let's go to that chart. This is the chart. I see. All right, now let me clean all this. Now, look at this. This is why it's still green. This is where you place the order, okay? This is where the order was placed. You can see this line, this green line here. You see, that was the order that was placed. You see it here, 30K. He placed a $30K order, and it was a buy. You see the sign of the arrow going up. And yes, so presently, you will see that the price, which is this red one here, has gone above where he bought it. And that's why you have this green. So this person, look at this place, the balance. The balance of this person is 1,547. Now, what happens if I close this particular order? This amount you have here will be added to the balance. That is when you make money in Forex. So you haven't made money and you haven't lost money until you close an order. So this is where you close the order. So if I click on this close button now, you see that, of course, the order closes. Let me do that. Okay, so I close this order. Watch the balance. The balance, like I said, is what? Is 1,547. But now I close this. You see? So what happens? It now turns to 1,557. So this person right now has just made about 9 euros. That is how to make money in Forex. And that is how to lose money. I mean, I'm not going to close this one now because, of course, I didn't open this account to lose. So I will leave it. But if you look at these accounts right now, my account now, it is not green. Okay, it is not green. It is what? It is red. Now, will I gain money if I close the account? No. What will happen? Whatever the negative is, okay, if you look at here, you have the net profit, which is minus 10. Then you have the gross. So this gross is what is yours, okay? Now, this gross profit is minus 9.56. So what will happen if I close these two orders? They will add, well, mathematically, they will add this minus 9.88 to my balance of 200. And when you add minus 9 to 200, what are you going to have? You're going to have 181. Well, this is 9.91. So you're going to have 190 on something. Okay, so it means I will be losing about 10 euros if I close these two. If I mistakenly click on this close now, then my balance will reduce. But if I wait till tomorrow, for example, like while I was waiting for the meeting, actually, you see, this is one of the orders I placed, okay, and this hour, this is the hour we are. So you can see 1, 2, 3 hours ago, while I was still attending to people, the price actually got here. And at that time, I was going to make about 4 or 5 euros, about 5 euros. But because I want to show us, I left it. So what I'm waiting for right now is that this price will rise above this place and this place, because this is where I have the two orders. One is here, one is here. So if it rises, if this price rises above this and hits up, then these two will become green. Now, from my calculations, from my studies, I'm hoping and I believe that by tomorrow, because if you look at the trend, okay, if nothing crazy happens overnight with the dollar or the Canadian dollar, if you look at the trend, after this big fall, it has now been going up and down, up and down. So it's time to go down. And now, possibly by tomorrow, in the next few hours, yeah. All right. Thank you, David. Okay, thank you, David. We'll see you. I'll catch up with you. All right. So possibly it will be going up. And that is when I will be making profit. So that's what I'm waiting for. Now, what makes people lose money? Number one, when they are scared, and they cannot wait. Well, but I'm not going anywhere. I don't need this money right now. I'm not trading these to become 1 million euros in a day. I have my target, so I'll wait. I don't care how long I wait. I will wait, but I know I'm not going to wait for too long. But also, so I don't lose all my money, because you can ask me, the question you should ask me now is, what if you start waiting and waiting and the price starts to drop? Okay, let me push. What if this price starts to drop here and it starts to go down and down and down and down and it's not stopping anymore? What are you going to do? Now, you're going to lose all your money. That's when you can lose all your money. Okay, so because I'm telling you how to lose in Forex and how not to lose. So if this price, which is here right now, instead of going up, starts dropping. If it drops, well, I mean, because the amount I traded is not too much. But if it drops to this point, for example, which is possible, we can't tell what can happen. By the time it will get to this point, I would have lost all the 200 euros. Okay, so that's how you lose money in Forex. So when you open positions like this and you leave it, and the market goes against you, either up or down, you can lose all your money. So what have I done? Because I'm not ready to lose all these 200. So for each of those trades, I have given myself a target that's like the maximum I can lose. So for this one, for example, if you look at this place, you see the way I'm putting my cursor, it says stop loss, okay? So if it drops to this line, you see this line here, if eventually, maybe overnight, the market starts dropping and it gets to this line, I've told the system, that's what you call robot trading or automated trading. I have told the system to cut off that order, to close it for me. So, but what will happen if it closes it? I will lose 22 euros. Is it okay to lose 22 euros? Yes. It is better to lose 22 euros and gain it back later than to lose all your money. So that's why when people ask me, is it possible to lose in Forex? Yes. Is it possible to lose everything? Yes. But is it possible not to lose everything? Yes, if you are not greedy. Now, I never used to use this stop loss before because I always believed that, well, I would faith it. I'll put faith that even if it drops, by the time it gets to this place, maybe something will happen, it will come back. No, don't use faith. Use your faith to make your decisions, to place your orders. But don't use faith to move the market, okay? Use your mathematics. So I have placed a stop loss here. I can lose 22 euros here on one of those orders, and that's the maximum I can lose from that order. And if it continues to drop further, for the second one, I placed a stop loss here also. For the second one, I will lose 10 euros. So for these two orders, there is possibility that if it really goes against me, which is not very likely from the look of things, but if it really goes against me, I possibly can lose 30 euros. No problem. But my capital is still there because the same amount I can make. But if it goes up, like we're expecting, like it did some hours ago, which it will still do very soon, I will make money because it will be green. And to make money, what if I'm not there? You can also do what you call take profits. So I actually set what I call take profit. Look at it here. That's the one. This it's not. Let me see if I can show it very well. No. Just a graph. Excuse me. I think I will enlarge this. Okay. Yeah. So if you look at it very well here, you see TP. TP means take profit, right? So I've set my take profit at 4 euros. So if it reaches this place by tonight or once it reaches this place, it will take the profit and I will be making 4 euros on one of those orders. The second take profit is a bit higher. Yeah, if it reaches there, I'll be making 5 euros. Okay, so why is my take profit? Why did I set it so low? Because it's a small account. Like I said, you cannot be too greedy. Okay, so why do I set my stop loss that much? Because from my calculations, I'm not expecting to lose that much. But peradventure, if I do, there is still much possibility of the market turning back, from my experience, from my calculations, than for me to lose everything. Okay, so that is exactly how that works. So that is how you lose money, and that is how you make money in Forex. So now let me go back to the second order. So I've talked about the buy order. Do we all understand what it means to place a buy order? Now, do you understand what it means to place a buy order? So to place a buy order means you are suggesting that the market will rise. So when you see that, when you suggest that I believe that the market will rise, then you place a buy order. Okay, so when you study your chart, or maybe you are with me, you are trading with me, and I study the chart with you, and I tell you, hey, listen, let's place a buy order. You will understand immediately that, okay, what Shola is trying to say is he expects this currency pair to rise, and if it rises, we will make money. So that's when you place a buy order. Now, when do you place a sell order? You place a sell order when you expect the price to drop. Now, let's go back to the, was it oil that we're checking now? Gas, natural gas. Where is it? Hold on. Natural gas. Where are you? Yeah. Okay, there we go. Now, look at this natural gas. Okay, now this is a, for me, if I want to make a decision now, I would say I will place a buy order, because I expect this to go up. Okay, I expect it to go up maybe by tomorrow or so. Okay, that's my proposition. Okay, that's what I believe should happen. Now, so if I want to make a buy order, I would show us very soon. But to make a sell order, let's take, for example, this is Brent. I don't know which one might go down now. Let me see. US stocks. Okay, the stock market, the US stock market, okay, the US 30. Now look at this trend. Okay, let's look at the trending again. Yeah, the trend really looks like it's way high up there, isn't it? Look at it, it's been rising, right? Fell a little bit, and consistently it's been rising, consistently. And now it's, oh, excuse me, that was wrong. So it's been rising, it's retraced its steps, it started rising again till this point and shot up again, and now it's kind of like stable. Now this point is what you call, like, it's kind of being stopped by something. Okay, so it's like it's not really going up right now. So you see that it's almost like in a line. I jotted that down. So because we have the support point and resistance. Yes, so we have the support and the resistance. So in this case, this is a resistance point. Okay, it looks like a resistance point. Resistance point means when something is going up and up and up, and then it's like it stops and then it starts coming down. It means something has resisted it from going up further. Okay, so that's what you call the resistance point, because these are the terms you hear when they are talking about financial markets and all that. So when it hits that resistance point, then the likely thing that will happen is it will fall at one point or the other. Okay, so for me, this looks like a point. Okay, it fell down a bit and now it's still rising, and now it's just here. Okay, now to make your decision, you can change the chart and check it, excuse me, in other hours. Okay, this is a 1 hour chart. Like I said to you, after 1 hour, another candle will form, right? So you can change the hour. When you want to do that, you should do that here. You can do that here. You can do that here. Look at this place. This hour. Okay, that's where you have the hour button here. Okay, that's the hour. Okay, so you can change the look of your chart from here. So you can switch to maybe a 4-hour chart. When you look at, okay, when you click on that, it gives you different options. You see, you have one from 1 minute. So if you click 1 minute now, it means that those candlesticks will be forming every minute. Let me just show you that. Okay, you will see how that works. Okay, now look at this candlestick presently. Okay, so the present candlestick now will change after 1 minute. It's remaining 18 seconds, 17 seconds. You look at here, 15 seconds, 14 seconds, 13 seconds. So you will find out that immediately it's 0, another candlestick will start forming. Why? Because it's a 1 minute chart. So it means that every minute a new candlestick forms. Watch it now. Watch it. You see? Another one just started forming. 58, 57, it's counting down again. You see it? So another candlestick starts forming. So that's how you all these candlesticks form and the patterns are made. So it's not something that is made like magic. No, it's just the movement of the price that is drawing that chart. Those of us that work in the hospital or that have been there before, we understand what I'm saying. When you go to the hospital and they connect your heart, to the chart, as your heart is beating, what will happen? It will be drawing lines. Exactly. That is what is happening here. So that's how the chart is formed. So when you change, what I want to do is to change this. You see the 1 minute chart, you see that it's quite different. We are still looking at the US stocks. We've checked the 1 hour chart, then look at the 4 hours chart. Aha. Now you see the trend. You see that the pattern is a bit different from what we saw in 1 hour. But if you look at this very well, it gives you a better look, a better outlook at what is really happening with US stocks. Look at this. It went up, it reached this resistance point, it came down. Went up, reached this, came down. Went up, reached this, came down. You see, it's always up and down. Now it's gone up. It has reached this point. It came down a bit, now it's up. Now, from all indications from the history, it looks very much like there might be a drop very soon. This is a 4-hour chart. You can switch again to more hours, 12 hours. That is how I do my own trading. So I don't just take one. Now, this is 12 hours chart. So it means that each of these candles is forming every 12 hours. That's what it means. So when I say 1 hour chart, 2 hours chart, I hope you understand what it means now. So it means that all these candles that you have here that forms the pattern, they are forming every 12 hours. But look at the pattern, okay? It still shows that the US stock is very high up there. Now, change it again. Make it a daily chart. This is a daily chart. You can see this now. Now, what does daily chart mean? It means that each candle is formed every day. Now, it remains 1 hour before the stock market closes, before this candle closes. So after 1 hour, a new day starts for this particular instrument. Okay, so a new day starts for us generally by 10 o'clock. Okay, a new day starts. In summer is by 11 o'clock. In winter is by 10 o'clock. So when the time changes, it's 11 o'clock and 10 o'clock. But that's when the market opens. But it's not as though it will close and everything will shut down. No, it will just close for some few minutes, maybe 1 or 2 minutes, and then it starts moving again. Okay, when it stops, then it starts moving again once a new day opens. Okay, so that is a day chart. So from the daily chart, you see that, well, it actually dropped for a while, for some months, because from there you can see, let me show you this. You can see from all this place, okay, if you come down, okay, if you draw it down like that, look at this line. What is showing here? The dates. So you will see that the distance between this place and this place, okay, is about from December, January, February to 15th of February or thereabout. So this is almost like 2 months, okay? This distance you just hear, this distance is about 2. So this is about what happened in 2 months. It's been stable. But look at this, from here to here, okay, if you draw it down, that's from February, from middle of February till middle of March or almost ending of March. So that's like 1 month. So in 1 month, see how it fell. And now from March, that's when the corona crisis started. Okay, so you can see what we're talking about with news and events. When Corona crisis came, the stock market really fell. But look at it, gradually, it's coming back again. But if you look at the trend now, you see that the upgoing is not as sharp as how it fell. Okay, so it means that it's gradual. And now we're still going to be having crisis. So it's going to be like this for a while. Now, this is the daily chart. You see that it's now different. Okay. Now, if I want to make my decision, okay, you can still check the weekly charts. You can check, you see, in the week. Okay, so you see the drop here, and then it's coming back. So you can use weekly chart, monthly chart. Well, make sure you shall do your research very well. That's the main thing. That's the end point. Make sure you do your research very well before you take your decision. So my decision right now, because I want to place an order, is I want to suggest that between now and maybe tomorrow or next tomorrow, within the next few days, there will be a drop, okay, for this currency. I mean, for this stock, this US 30. So if I want to suggest that there will be a drop, then what type of order am I going to place? Now, if I'm expecting the price, okay, from here to drop, I should not place a buy, because if I place a buy, as it is dropping, I will be losing money. I mean, it will be negative. So when you expect the trend or the price to drop, that is when you place a sell order. Are you with me now? That is when you place what? A sell order. So this is the second type of order you place, a sell order. So a sell order is the one you place when you expect the price to drop. Do we all understand? If you understand, please say yes. I've talked a lot today. Wow, this is real training now. I'm feeling it now. Are we all there? Are we still with me? I'm not even seeing our videos. Are we still with me? Yes. Okay. I'm happy. Thank you. All right. So I'm not wasting time. Oh, this is beautiful. Thank you. All right. Now that we understand what is a sell order and what is a buy order, our time is up. But I want you all to place an order tonight. So would you please give me 10 minutes more? Is it possible we take extra 10 minutes tonight? If you agree that we take extra 10 minutes, please write 10. Please write 10. If you agree that we take extra 10 minutes, write 10. Wow, I see people that are willing. My God. 20. I can go till tomorrow. Oh my God. All right. Okay, you agreed to 10. Oh, 50 more. Okay, thank you. All right. Now, in these 10 minutes, I want us to make good use of it. So what I want to teach you now is what you will be doing to make money, to be placing orders. Now, let me just quickly say this, okay? At the end of this course, by Friday, I will tell us the opportunities I have. I was discussing that with a couple of people. For those that will be interested to continue, like to really trade, I mean, the course is for you to have knowledge, okay? I understand. But possibly there are people that will really want to trade. They just don't want the knowledge. They will love to trade. For people like that, I'm not just going to leave you alone, okay? I will want to continue with you. I would love to, well, I wouldn't want to say mentor because I'm not like a big pro too, but permit me to use the word. I would love to mentor you, to guide you, to trade with you, to chat with you. Like, it will not be everyday class, but maybe once in a week, we have a long class. We can do it middle of the night or whatever, and we teach ourselves, like all these methods, how to trade. And of course, if you really want to trade and you have money to trade, I will be guiding you, okay? Like, I'll be giving you signals. I will tell you exactly what trade to place and what to set and how to make money, okay? So I would explain all that on Friday, okay? So that's going to be an opportunity. So you're going to enjoy that, okay? You're going to enjoy that. So you can be rest assured, I'm not just going to leave you like that, okay? So yeah, thank you. Now let's go back to this class. So like I said, if you're going to be trading, this is what you're going to be doing. You're going to be placing orders. So how do you place a buy and a sell order? It's very, very simple. First thing, make sure that your chart is opened, okay? You have your chart opened. Now, so I have my chart opened. I have studied it. That's the second thing. Study it and make your decision. We've studied about 2 charts now, and we've made that decision. So we decided that on this US stocks, US 30, we want to place a sell. We want to propose a sell. Now we will put that there. So to make that order, please, if you're using computer or desktop, you will do a right click. You know, you have left click and right click. You will do a right click. When you right click on the chart, why do I like to right click on the chart? Because that will make me to be sure that I'm actually buying that particular instrument, right? So when you right click on the chart, this is what you have. So you have the first thing that comes up is create new order. Then you have buy limit at the stop limit at the sell limit. You have a lot of things. Now, for those that will continue with me in the master class, yes, I will teach you all of this. But for you that just wants to start trading and just have knowledge, you don't need all this fun. I mean, this is something you learn in months. It can take us 6 months to learn all this. But the only thing that concerns you right now is to create a new order. So that's the first one there. So once you have right-clicked on the chart, you go to create new order. Once you create that, then a dialog box comes up. Now, this is your dialog box. This is where you make the decision on some very important things. Listen to me. I will not teach you that now because it's something that I want you to be fresh when I will talk to you about it. That's the first thing I will teach you tomorrow. I will teach you about placing orders, auto trading, and and some terminologies, okay? I know you have learned a lot of terminologies today and some few terminologies, and possibly we do a little bit more of analysis tomorrow. I mean, we've done analysis today, isn't it? I've showed you how the chart is going and how I make my decisions, how to get the history. That was what we just did now is a little bit of technical analysis, okay? It's a little bit of technical analysis like Mr. Sonny told us and taught us earlier. We were able to study the chart, the history, and make our decision. All right? So I will do a little bit more of that tomorrow. Then I would spend a lot of time on this column tomorrow. But for now, for tonight, you will make an order, okay, on your demo. So to make an order, you have opened this dialog box. Now here you have market order. Okay, let me draw with pen so that we can see. Okay, so you have your market order. That's the one that concerns you now. That's the one that you make now. I will teach you all these other ones tomorrow, okay, God willing. But possibly, if we have time, we'll do it tomorrow. If not, it will be for the master class. Now, check again, okay, before you make your order, check again this place, that it is exactly the currency or the instrument you wish to trade that is there. Then make sure you see you have sell and you have buy. One is green, that's the one that is highlighted, and one is not green. Now, in this particular case, what order do we want to place? We want to place a sell, right? So if you go ahead and just click place order, which is here, if you just come here and click place order, the order that you'll be placing automatically will be what? Will be a buy. So be careful. Make sure you click on the order you wish to place. You see, when I clicked on that cell now, what happened? It turned red. Okay? It turned red. So you see that the box turned red. So it means that this is the one that is highlighted now. So I'm sure it's a sell order. Then another very, very extremely important thing is this volume. Now, I'm not going to talk about this tonight. I just want to show you how to place order. I will teach this tomorrow. This is what kills people. SARS and MAS. This is what kills people. This is what kills me. This is where greed is. The volume you place. The higher the volume, the higher the risk. Of course, the higher the volume, the higher the potential profit. But are we God that we are sure where the market will go? We cannot really tell. We are only suggesting, we are only proposing, we are only believing that it will go that way. What if it doesn't go that way? Okay, it's only when you are 100% sure, which you can never be, even in life, that is when you can put all in, like heavy volume. But please, let your target be minimal. Watch your volume. You don't have to place the minimum if depending on your capital. So I will do a little bit of ratio for us tomorrow, but those that will be trading with me, this is what they will enjoy. Because if you are trading, all you need to tell me is how much capital you have, and I'll tell you exactly what volume to place and what for what leverage and all that. So that's something else. But for general knowledge, please try and place minimal volume, like very reasonable volume. So here, if you click on it, you will see all the volumes that your capital or your margin, I will talk about margin tomorrow, that your margin can take. The maximum your margin can take here is 2 indices. Now look at the price of 2 indices. It says the price of 2 indices, the trade value is 49,000. That's a lot of money. 49,000. Now, margin required 1,495. Margin available. What do you have there? 1,557. So if you are taking 2 indices, it's like you are risking all your money. That is too much. That's extremely too much. So for me, I would rather go for 1 indices. 1 indices is like risking half of my money, half of this available margin. Well, this is not real money, okay? This is my demo account, so I can I can use it. Now, this is like half of my margin. Now, I can still do that to take a risk, okay? Now, stop loss, take profit, I'll teach us that tomorrow. That is your power. That is what will not make you lose money in Forex. That is what will not make you lose money in Forex. So you don't want to miss the class tomorrow. So, but after you have chosen the volume, remember, you choose the symbol, you tell what you want, sell or buy. Here we are choosing sell. We choose our volume, we want the minimum volume, and then we click place order. Come. You hear that sound? I always love that sound. But I don't love that sound as much as the one that takes profit. Okay, so once you have placed that order, okay. So when you look here, oh, now let me, I've messed up my chart. Okay, when you look here, you see the order has been placed. 1 indices going down. You see that? Immediately, we are already making profit. Whoa, you see how much it's making right now. Now, we're going to leave this till tomorrow. Okay, let's see what happens tomorrow. So, thank you very much. This is 10 after. So we said 10 minutes, but we are not going until you have placed your own order. So what I want each of you to do right now, well, maybe as an assignment, before you sleep tonight, go through different charts. If it's on your phone, let me see if I can help out with people using the phone. If it's on your phone, it's easier because on your phone, all that you have are the symbols, okay? So to have more symbols, you click on that plus there. When you click on that plus, you see it brings you to where you have Forex, sports, and all that. And then you can choose the symbol that you want, the currency pair you want. So to study each of these ones, you can also go to the chart. So the chart in front, okay, like for example, the US 30 that we just placed order on, if I click on that chart that is in front of it, it opens up the chart, okay? So you see the chart here. And then you can change the timing. You see H1. H1 means 1 hour. So if you click on that H1, sorry, I'm using a hair. Excuse me. If you click on that H1, you can click on it once. If it shows white, you click on it twice. You go back and click on it again. Now, you see, you can change the time. So when you change the time also, I'll put it on daily chart, okay? So it changes it to daily chart and you see that the pattern differs. So to place an order, okay, on your phone, using your phone, I hope we are seeing my phone, right? On my video, if you're seeing my video, okay, you'll be seeing my phone. Okay, let me close this one now and just come back here. Okay, so for those using phone. All right, so if you look at here, you see, now, if you have made your decision, one indices, you can do buy or sell directly, immediately, okay, without going to any platform, once you are sure. But for learners, I will advise you not to do that, okay? Don't do that. For you to make an order on your phone, you need to click, you need to click, because me, I have set mine to place order automatically. So, but when you want to do yours, you can come to others. Sorry, let me see. Okay, when you come here, beside the symbol, you see that arrow. You can change the symbols, and then to place another, you click on buy or sell. Now, for you, if you have not set it on automatic, once you click on buy or sell, it will take you to that box where you can choose the volume and everything, okay? So that's how you place order using your phone. So for those that are using their phone, please kindly use your phone and place an order. So my assignment to us is this. I don't know how much you have in your account. Just try as much as possible to place one order tonight. Okay, that's the fun of Forex. It's a demo account. That money is not yours, it's not theirs, it's virtual. But it's exactly the same as what will happen if it was real money. So I want you to go through different charts, okay? Study the chart as you want. If you like, go and read CNN, read Google, whatever. Just make a decision. You must not make a right decision. You must not see green. But make sure you place a buy and a sell. Place a buy order on one instrument and then a sell order on another instrument. So tomorrow we will look at the results together. You will tell us if you have won, if you have made some money or you have lost some money. Okay, so we will see the one we placed together also. We will see that tomorrow and see how it plays out. But I'm telling you, he's going to do well. He's already doing well. And I hope he does well by tomorrow. So tomorrow, we will look into that together. We'll learn about that together. And then we will do some deeper things, look at the margins. But brethren, Forex trading is no more than this. It's not more than this. It's about placing orders, looking at the charts, listening to news, take your decision, place your order, and that's it. Okay? So is there anyone that has a question? Mr. Philon?
Yeah.
Yes.
I'm trying to place an order through my phone.
Yeah.
I did. The message I'm getting is telling me the market for this symbol is closed.
That's it. So it means that market is closed for now. Is it stocks or gold or what?
It's oil.
Oil. Maybe it's closed. But are you doing that on demo account?
See, on demo account, yeah.
Is it green? All your symbols, are they green? Do they have a tick, like a mark that is green?
It's not showing me that.
No, on the side. Okay, can you see mine?
Okay,
you see the US 30. You see that it's not green. It's like 2 strokes. That one is closed presently. So
okay.
If it's giving you a tick like this, then you can trade it. But if it's closed, it will be like a pause.
Yeah, it's closed. Yeah. It's closed.
So, if it is paused, it means that it is closed. So you see that US 30 is closed, US 500 is closed. Some markets, are closed. Especially all the stocks are closed. They are just going to be closed for about a few minutes, some for 30 minutes, and then it will go back again and open up. Okay. Yes. So that's it. Any other person?
Thank you.
Thank you, sir. Okay, if there's no other person, I want to say thank you very much for your time. I can't still believe that I still have this many people waiting. Most people would have run away, that this is too technical and all that. But honestly speaking, if you wait till tomorrow, then you see that it's easier. But what will make it really easy for you is if you yourself, you go out tonight and place orders. Just play around with it. Lose all that money. Play around with it. it will give you boost. It will make you know that you can now actually do it. So I will see us again tomorrow. Thank you very much. I'm so grateful. God bless you all, and I'll see you tomorrow. Please, if you need anything, maybe in placing orders or anything, my WhatsApp is always on. Send me messages. You might not call me, but send me messages. If you need this video again, maybe to go step by step, it will be ready by tomorrow morning. I can send you the link, but please don't share it with anybody. And that's it. So you can chat me up anytime. If I don't understand what you're saying, I'll call you. Okay, so that we do this together. Thank you very much. God bless you.
Believe you me, when I see me put assurance now, card assurance. Once it was there.